Um, Vaishnav, you can start.
All right. Good evening, everyone, and welcome to the Felicitation event of the National Finance Olympiad 2023. My name is Vaishnav Shankar. I'm sure a lot of teachers would be familiar with me as I've been coordinating with schools for NFO this year. I would like to thank all the schools for participating in the National Finance Olympiad and helping us promote financial literacy to the students. To all our students, parents, and educators attending this event, thank you for joining us. This year has proven exceptionally momentous for us as we have achieved significant milestones in our commitment towards our mission to spread financial literacy in India. We organized the National Finance Olympiad in over 100 schools across the country, and we're thrilled to share that more than 5,000 students have taken part in this competition. I would like to introduce the host for today's event, Mitul Mehta. Mitul is the co-founder of Streak. Streak is a fintech startup building products for the youth of the country to enable them to gain financial experience from an early age. The NFO is a financial literacy initiative by Streak. So what are we waiting for? Let's get started. Mitul, over to you.
Thanks, Vaishnav. Thank you for the introduction. I'm pleased to begin today's event with an exclusive panel discussion on the importance of early financial education. We are privileged to have some of the most extraordinary minds and industry leaders joining us today for this discussion. So without further ado, let me introduce you to our esteemed panelists. Here with us is Mr. Asit Oberoi, a distinguished figure in the Indian financial services industry with over 30 years of experience in the world of finance. He has held various prestigious positions in various companies, from serving as the Vice President of Bank of America to being the Chief Operations Officer of Yes Bank. He has accomplished much in his career. Currently, he holds the role of Regional Director at iPiD, a fintech headquartered in Singapore. We extend a warm welcome to you, sir. It's truly an honor to have you joining us in this event today.
Thank you, Mithil, for having me.
Yes. Next, we have Professor Sankarshan Basu, a familiar name in the IIM community, who has served as a professor at IIM Bangalore for nearly 22 years. With an MSc in statistics from IIT Kanpur and a PhD in statistics from London School of Economics, his depth of knowledge is truly impressive. Professor Basu has also been a visiting professor at University of Twente, Netherlands, Gothenburg University, Sweden, ESCP, Paris, CFVG, Ho Chi Minh City, Vietnam, and Asian Institute of Technology, Bangkok. His expertise in the field of finance has led him to be a consultant to a number of banks, financial institutions, as well as multinational government agencies. It is a pleasure to have you with us today, sir.
Good evening, and thank you, Mitul. Thank you for having me. Thank you.
Next in our panel, we have Mr. Snehanshu Gandhi, a fellow entrepreneur who embarked on his entrepreneurial journey at the age of 21 and is currently the co-founder of Kaagaz, a homegrown document super app. With over 20 million downloads, Kaagaz is the office suite of mobile-first businesses of Bharat. Welcome to the event, Snehanshu. We are excited to hear more about your journey and the impact of Kaagaz.
Thank you, Mitul, for having me here. Looking forward to the conversation.
Once again, a hearty welcome to all our panelists today. Our parents, teachers, students are all excited to hear your thoughts of how financial understanding can help mold the future generations of the country. Today's conversation is not just about numbers and budgets. It's about empowering the next generation with the knowledge and skill set that they will need to navigate the complex world of finance. A lot has changed at the beginning of the 21st century, and a lot continues to change as we speak. With so much happening so fast, gaining financial skills early has almost become a necessity in this world. However, this concept of financial literacy is still pretty new to many in our country and is not given importance that it deserves yet. I would like to start the panel discussion with a question to all our panelists. When did you first learn about money or finance? Is there anything you would have done differently when you started your own financial journey? I would like Mr. Sankarshan Basu to start off.
Well, that's interesting. Would I have done anything differently? Probably, looking back in hindsight, yes, but also remember the opportunities that we had when we started off over 25, 30 years back was very different from the opportunities that you have today. For a very simple reason. I mean, forget all fintech and all. Very simply, things like there was no demat accounts, there was no trading account, so you had to rely on a. Hi, sorry, I think I dropped off in between. Yeah, the world that we started off in were very different from the world that exists for everybody today. So I think in that sense, would we have done differently if everything was available? Yes, but I think the earlier you start, the better. I started off, if you ask me personally, I started off over 25, 30, close to 30 years back, dabbling in a few stocks. Amount of even hearsay and friends and family advice. Some of those worked, some of those didn't. I also have to give people the context that when I started at least, there was still something called the controller of capital issues, which basically meant that if you applied for an IPO, all IPOs had to be sold only at the face value. And if you therefore were lucky enough to get some of those, what is today's blue chip stocks at face value, you really made money in the course of 25 years. Not just the usual growth, but I think that supernormal growth that we've seen. Would we have done differently? Probably yes. I think looking back, even in given those things, one should have done a lot more research, because I think it was more of hits. I mean, trial and errors, hits and misses, and all of that. I think I would argue, been a little more circumspect, and circumspect not in terms of not doing it, but in terms of being a little more organized in the way one would have gone about it. Right? That's what I would argue is what would have been different if I were to. Some of the conditions I wouldn't be able to change, but that's what I would have probably done differently if I could time travel back 25 years.
Got it. Yeah, that makes a lot of sense. Yeah, absolutely. The financial markets have changed so much, and the way with digitization, the way the ease of how you invest in markets is considerably different. What about you, Asit sir? Like, what are your thoughts?
So, I come from a family of investors. My father was into equity investing. My brother was into equity investing. And, in some ways, my dad actually started investing in equities as the market actually started in India. So he was a very, very early investor, and he would do some investing in my name and my brother's name as well. So I actually got more active in it post getting into college. Not so much college, with my first job, getting into my first job, I got more active as an investor. And I've been investing in listed equity for a very long time. Obviously, when my dad started investing, he got stuff at face value. So he had the blue chips, and me and my brother reaped the benefits of that because, stocks have really multiplied. And I've been investing in listed equity since very long. And also now I'm investing in startups. So before investing, I don't only look at just somebody telling me, go ahead and invest. So I look at which sector of the economy is doing well, which companies within that are doing well. I look at financial metrics, but I also look at things like pricing, margins. I look at quality of management, etc. So I look at some of those sectors. So I even, interestingly, before I buy a company like ABC Limited, which is a shoe company, without naming the company, I visit the store, I see how good the retail products are being sold, how passionate the salesmen are, what are the types of tie-ups they have, etc. So I go into some degree of detail other than financial metrics. What would I do differently? I would probably start investing from school if I were to do things differently, because the multiplier impact of investing is huge. So if you step back and look at, a fund, which, without naming the fund, if you did invested in that 5 years back, 10,000 rupees, that could go up to 4 lakhs, where some of the small cap funds that are there. So the power of multiplying, if people start investing at early stage, if I hadn't started investing, I'd be a lot more wealthy to start with, potentially. So that's what I would do differently. I'd maybe invest my pocket money and other things also.
Absolutely. I completely agree. Like, I think starting early and knowing the power of compounding early on
Those days,
is
I
very
agree
crucial.
with Professor. Those days, life is very different from what it is today, right?
Right.
Our kids have it very differently. They can, a lot of both sons are active investors. So,
Okay.
yeah.
Great. Yeah, over to you, Snehanshu. I'm eager to hear your thoughts from an entrepreneurial standpoint, and also being the young one with me on the conversation, that your perspective will be different.
Young one along with Mithul.
I actually had a very contrasting upbringing per se with respect to money compared to Asit sir here. My father, I think, has never invested in stocks. He was in a government job, and we lived in a very small town in Rajasthan, working there. And I saw my father invest only in FDs and PFs and PPFs, and that was what my understanding of investment was. Some of the things that I learned at that stage. So one thing that I would definitely want to change is there's no active conversation around investing in our home. This was something that father would do that, and you just don't talk about money. You focus on your studies, to focus on getting into IIT, and that was the kind of environment that I grew up in. So my learnings about money much more happened after I started making my own money, which was like after college when I had money coming in. A little bit that I made during internships probably was just to spend, and didn't think about investing at that stage. But it all started after I started making my own money, and then went through different stages of learning. In fact, equity investing for me did not start at that point. It started as mutual funds, but not direct equity. It took a few years actually to get into some direct equity exposure, and then getting into a little bit of and that exposure was also through a portfolio management service that I kind of got services from, and then much later investing myself into stocks, and taking some effort towards that. So it was a very different journey for me. Ideally, I would have liked to have more conversation or some more exposure to something like an NFO probably would give me exposure to what investing is, other than just FDs and the super safe investments that was the way for my father.
Right. Yeah. The points you. Yeah. Good.
Add
Go
to
ahead,
the
sir.
add to the point Mr. Gandhi was making. I've just forgotten the first name. It's so I just said Mr. Gandhi. I have so many. I've been a CFO in one of my roles, and I had a lot of fellow CFOs who were managing companies' balance sheets of thousands and 10,000 crores. But in their own personal investing, they were doing FDs. So I would tell them, see the power of them. And I used to work for a bank, so I had to sell the FD as well as a product, right? So I've worked in a bank most of my life. I would tell them, 6-7% compounding versus, some of the small cap funds can give 35-40% compounding. So I just see the power of compounding, and I've educated so many of my colleagues and other youngsters into the power of equity stroke. Obviously, start with mutual funds and then look at equity.
Right. Yeah, like Snehanshu said, right? Like, I think a lot of Indian families do shy away from talking about money, or it doesn't just come up naturally in a lot of families, especially when the kids are young. And additionally, all the points like really made sense, and yeah, it makes sense. It makes sense, absolutely. Like I would want to ask Mr. Sankarshan to shed some light on this. So we have parents and teachers in the audience today who would have this question, like, what can parents do at home to help their children build a good relationship with money early on? Like Snehanshu said, like the conversation itself is not there. So how would you suggest they do this?
So with all due respect, the first thing I would suggest is let kids handle money. I mean, not huge amounts, obviously, but small amounts. It's okay if they lose, 10 rupees, 50 rupees, 100 rupees here and there, but they'll learn the process. You can't trying to be overprotective that you lose 10 rupees, you lose 20 rupees, whatever. And I'm not saying you lose like a hell of a lot of money, but even small thing makes kids more responsible. Yes, they might lose once in a while, and then they will lose. Everybody will lose. It's not that we don't. But the question is, if you tell them that no, don't do this, and we will tell you what to do, that they'll never learn. Number one. Number two, they should actually learn a little more. And I think there should be a conversation about money. It's not about what they're spending, but the conversation to understand what is money all about, the importance of money, the budgeting exercise. I mean, at a very broad level, the budgeting argument, the need to have a budget going forward. How do you budget yourself? And things like that, and kind of have the discussion about a financial process and the role of it. Not sudden. I mean, most of the kids that we see are like till they're in like school, until they're at home. Effectively, let me put it this way: till they're at home, a lot of them are sheltered from a lot of these things. The maximum they get to see and spend is essentially the little bit of pocket money they get, and that too is kind of, in many cases, it's like on demand. It has some money, but if you need more, it's not that you need to budget. You just ask for more, and your parents will give you. And suddenly, I mean, most cases it's after school as an undergrad. In some cases, even as a postgrad, you suddenly land up going somewhere else to study outside in some other city, and suddenly you have to manage all of these things. And you really don't, and you're really thrown into the deep end. Yeah, everybody will learn, but you learn at a far larger cost. But if you kind of if you people up for that, and if you'd kind of given people the exposure, the kids the exposure, they would have done far better. And that's why my single point advice would be, make them aware of what the role money plays, the importance, and how it is to be handled, and all of that. Don't just shy away. It's not a bad thing to kind of talk about money. It's definitely not bad to be aware of the larger context that kind of go practical exposure. Even as I said, one could treat it as a cost of that understanding, cost of that training. That maybe they lose a little bit of money. They go to a store, they will not be able to calculate effectively, and they lose. Instead of collecting the exact change, they might do the store exact change back. They may not be careful. They may lose 100 rupees on the road by being careless and all of that. I think that's a part and parcel of it, and that's fine. But that will actually go a long way in kind of helping them understand the importance going forward.
Absolutely, sir. I completely agree. I think a lot of students will face this in their life when they go to college and they're suddenly given a good amount of pocket money and the freedom. It's the natural thing to do is like, why don't I spend this and not save it or not budget it? I completely agree. And that message makes sense. Like, so students should absolutely try and start saving up or start investing if they can, to kind of get some basic experiences and some failing early to get the lessons early on. Mr. Asit, like in your vast career, I'm sure like you've seen various different people dealing with money in different ways, right? And dealing with their finances. According to you, what are the impacts of financial illiteracy on a person as they navigate through their life?
So, one of the things, Mithul, I have seen with young kids as well as young adults, that people are more interested in spending. There is, very often there isn't so much of a desire. One of the things which resonates with me is focus on actually, assume you get your pocket money as a kid. Many kids get pocket money. As you get your pocket money, you look at seeing how you can assume you want to invest 10% of it. You actually do that 10% investment, and then you start spending. And that could be a process that can continue as you get your first job, etc. First spend 10%, and the CNBC and other people have done a lot of shows on this. But that 10% can over time become 50% as you start earning more money. But I've noticed also it's not a priority for people starting careers. It's not a priority for people. They want to rather spend, and then they get into debt. What happens is you get into debt, and I'm not saying debt is bad. If you want to buy a house and other things, at times you will get into debt. But if you start saving at an early age, then you have a cushion in life. Also, if you are just financially illiterate and you don't, look at all that, what will happen is you will just keep on getting into debt. And when you have critical occasions in your life, assume there is a child's wedding, there is, and somebody's unwell, very unwell, or at a later stage when you get into retirement, if you're financially illiterate, then there are no savings for those events. Then you get into, and assume you're into debt, then you get into more debt. So, it's a question of planning your life. And I tell this to people, if you plan, for example, I have a job, but I'm not actively working today. But the fact that this phase of my life, I planned 10, 15 years back, maybe even longer, kept on planning and fine-tuning my planning. So you have to plan your life. And if you plan it well, you will realize smart guys, and they don't have to be very high degrees of finance in their lives. If they are smart, they will earn more money from good investing than from their salary. Obviously, their salary will lead for a pocket of money to invest. But that's the benefit of smart investing versus financial illiteracy, which will lead you into high levels of debt and you don't have money for critical occasions in your life. So that's why whenever I get a chance today in this phase of my life, which is a phase about giving back to society, I wish I had come earlier, but it normally comes a little later, is I try and whenever I encounter youngsters, and I invest in a lot of startups at various stages, and I meet a lot of investors and I meet a lot of young guys at various stages, including people who had worked with me in other banks. I try and spend 10 minutes of the conversation on investing and how important it is.
Right. Yeah, absolutely. I agree with you, sir.
And
one of the things.
I would like to take a second really to compliment Streak for launching something like the National Finance Olympiad, because very often this is something which is, to my mind, practical knowledge that you are imparting. I have found, based on my experience, which is very dated, that education very often in India is very bookish. Like, I'm a chartered accountant. A lot of my education, and I know the MBAs have it much better. MBA, I wish in some ways I'd done an MBA versus a CA. Education is very bookish, but something like what you're doing on financial literacy is actually bringing some practical experiences to life. So I wanted to just compliment you all for the great work you guys are doing. So
thank you so much, sir. Yeah, all we want to do with NFO is really instead of making it seem like a proper course, we want to make it into a competitive examination so that people have that short stint of time to really study and catch up and compete with their peers. So that creates excitement.
In this program, if I may say so, and Professor Basu was probably more competent than I am because he's into education. If you bring in a little bit of practical twist, maybe each person, assume there are five finalists, you do a little bit of mentoring with
Right.
a financial expert, could be from a wealth management company or wherever. If you all give them a little bit of practical mentoring, one-to-one, and then you do the exam and you see the benefits of some of that, maybe they can perform even better. It's like case studies and IIM MBAs and case studies and other things. It's just something for you guys to consider.
Yeah, we will. That's great. Snehanshu, I have a question for you. I'm sure a lot of kids attending the event today, a lot of students are looking to explore entrepreneurship at some point, right? That it's become the hot thing recently. So, how important is it? I would want you to expand a little bit briefly on your journey as an entrepreneur, and also how important is it for them to have financial understanding and and where would they apply it in their journey if they were to start a startup tomorrow?
Sure. So I started my first startup company when I was in my final year of engineering at IIT Bombay. Honestly, when we started that company, and this was back in 2006, 2007, the startup ecosystem in India was not like what it is today. And we did not actually know that we are starting a company, we are starting a startup like that. Entrepreneurship was not the word that we had kind of looked at. We were just trying to solve a problem that we saw in our circles and thought that there should be a solution. And we started like that. And in fact, if I look back, the amongst the challenges that we faced in that first company, we did that for about a year and a half before shutting down and moving to a job. Amongst the a few challenges that we had, one of those was we did not understand money at all. And we, at some point, also kind of got scared a little that maybe this is not something that we are equipped to do. The moment it came down to, the funding that we were getting and how all of that is going to work was something which was very alien to us. And we knew how to build products. We knew how to build a website and sell our stuff, but didn't understand this part, which was where I made sure that when I started up next time, which was almost 7-8 years after the first one, I had gained experience. I had done an MBA in between, so that I was not scared of finance or how a company's finances run or what are the things that I need to know. And of course, you learn a lot of things when you start, but important is that you should not be one scared of all of this, and two, do not think that this is not important. And that was something that kind of came with whatever years of work experience that I had. That was on the running a company front. On personal front also, what I learned over time was that before I decide to start, again, startups look glamorous from outside, but it's a grind. We are going through it, and it takes a few years to really get the kind of outcomes that you're looking at, and that could mean no salary years or very less salary years, etc. And for that, it's important for you to have enough, enough assets to kind of sustain yourself and your family, if you have family, to be able to take that plunge. When I started my second company in 2015, I was already married. My daughter was on the way, and I knew that if I start now, there's going to be a period where money could be a challenge, and I had to plan that, do I have enough savings or not? So those are the kind of places where having that sense of understanding of finance, why it is important. It may be different for different people. For someone trying to become an entrepreneur, it is this. For someone who's trying to do something else in their life, it could be different. But having that understanding that this is my financial requirement, this is my financial responsibility, and how do I manage so that I can do things that I want to without getting into struggles or getting into debt and those kind of things. So that's how I have thought about and learned about finance during my entrepreneurship journey. Of course, from a company finance perspective, a lot of things are slightly different, but as far as the bases are clear, you can learn those things on the go.
I think this is something engineers go through because we're not used, a lot of subjects like finance, we brush it away as if it's a commerce student subject. Why do we need to go through this, right? And then when you start a company or even get a job and get your first salary is when you realize, okay, what am I supposed to do with this? It's supposed to sit in the bank? Am I supposed to spend it all? It becomes this cycle of questions we didn't get answers to. And then the curiosity starts, right? Absolutely agree, man. I think a lot of people go through that. Yeah, that's it.
The only thing I will tell you, being a finance person,
yes.
finance, a lot of investing and managing money is very often all about common sense. Use common sense. It's not very complicated stuff.
Right.
If a product is doing well, you can visit assume it's a retail product, shoe company, I gave the example earlier. You go to that store, you will know it's doing well. How many people are in that store? How good are the sales guy? Is he cross-selling different products to you? How many tie-ups does that company have? Is it only selling its own product, or does it have tie-ups for other things? how many stores, other stores expanding? Are they going up? So basically you apply investing is all about common sense. The financial metrics are very important also, but some of them, can also be understood based on common sense. So I think very often, I think we overcomplicate it, or we want to say engineers can't do good investing. I have seen housewives do very good investing.
Right. Yeah, I think it's about exposure and accepting that exposure is required instead of trying to brush it away and be like it's not required right now. I'll do it.
It's all about passion.
Yeah.
Me and my brother was a senior executive at Coca-Cola. He was CEO for Coke in Singapore, Malaysia, etc. He says this to me, and I also say that to him as well. So it's common what we say, that if you are passionate about what you're doing, that's the best job to do. And ideally in education, if you can bring in the fact that discover your passion should be a course. I don't know if it's possible, but if you discover your passion, towards the end of my career, 35-year career, I discovered I was best at sales, better than anything else. And I was a natural salesperson. Sit on a plane with a flight, I would make friends with the guy sitting next to me, no matter who it was. So it's all about discovering your passion.
Absolutely.
Slightly digressing, but sorry about that.
No problem. Yeah. So like we discussed right now, like students struggle to focus on finance when, say, for example, especially science students, they brush it off. So Sankarshan sir, this is I wanted to ask you this, like in this highly competitive world, right? Students mostly focusing on core subjects taught in school, like science, physics, chemistry, math. Like especially the science students, like how does financial literacy stack up against these subjects? Like how should students perceive it? Sir, you're on mute.
I'm sorry. How do students perceive it? Vis-a-vis how should students perceive it? There's this interesting discussion. If you ask me how should students perceive it, I think students should give it fairly high level of importance. You should understand that most of the other countries around the world, including the US today, I think there are about 15 or 16 of the 50 odd states where today to graduate from school, high school, you need to take an exam which kind of it does not add up to your GPA or whatever else, but you need to kind of show a certain level of financial literacy, or you need to be financially literate as per the condition for you to be even a high school graduate. Unfortunately, in India and in many other parts of the world, that's really not the case. We still believe, and I do, and in that sense, my argument is not so much against the students. I've been hearing this, and as all of you have been saying that you engineers are focused on this. Let me ask a reverse question. Why are you focused on that? Who stopped you from looking at something else? Right? Who stopped you from doing other things? This thing, engineers don't look at this, engineers don't look at that, I think is a myth that we've created, part significantly based on our society and our peer pressure, peer group, that look, what you just need to somehow crack this exam, you just need to somehow be in this college or this institute, be it an IID, be it an IIM, XYZ, doesn't really matter. And rest of it doesn't really matter. Unfortunately, the world is not, so black and white. The world does need other things. And I think it's important from a very early age and then this is more directed at parents, and I know a lot of parents will not like the parents of encouraging these young adults to also look at other things, right? And this is just not about finance, it's about everything. Look at other things. It is not as if you can wear a blinder, just run through a course. You need to have pretty 360-degree vision. Yes, you need to focus on something more. You need to kind of also have an understanding and exposure in other areas. And that is what would lead to a holistic development and a holistic story as one goes forward. And then if you look at most successful people in the world of business and anywhere, they may have their core strengths in one specific discipline or one specific area, but they actually are multifaceted and they have an understanding, or they actually look at the world with a much larger lens. And finance and financial literacy is obviously one of the most important arguments that come in that. And therefore, it should be basically an absolute no-brainer to say that that is something that should be inculcated right from the beginning in students, in kids, young adults. And with as Mr. Oberoi has been saying, with some amount of practicality and things like that put in place, so that they learn in the process. It is not that everybody needs to become a financial whiz kid. You see, you don't need to be an electrical engineer. You don't need to be an electrician, but we all know how to change a bulb in our houses, or go and do basic stuff and stuff like that. And as you all know, well, in India we still can afford, and the flexibility there for every split we can call a guy out there, a handyman, to do it. The more we move out of the country, that ability, and people can do a lot more things on their own. They don't need to be specialists in that. Similarly, you don't need to be a finance specialist, but you should at least have the broad understanding what and how does it impact you. I think that's something which needs to be inculcated, and enough amount of focus should actually be put in that, along with your focus on your core subjects or specific interest groups and things like that, whatever you want to say. But this should also be as important as anything else.
Yeah, I second that, sir. Absolutely. I think it shouldn't be based off what major you're trying to do or what your interests lie. I think at the end of the day, money is an aspect in everybody's lives, regardless of what career choice or career path they take up. So they should at least learn the basics of how to handle it or how to manage it. Sir, Asit, sir, I have a question for you. A lot of students are curious, after discussing all of this, on how should they start investing, or how should they go about the stock market, and how should they kickstart this journey? Like, what are the few steps that you would suggest for them to slowly start building experience for this?
So I would say, one is obviously, I would hope over time, when education policies change for students or in schools, and investing should be ideally part of that journey of students. Also, I think wealth managers should do their bit to educate. So, for example, wealth management should reach students as well. But if students start investing their pocket money before they start spending it, and ideally they should begin that in mutual funds, do SIPs, because they earn they earn their pocket money every month, so they can invest it in a mutual fund SIP. And if they're really passionate, over time they can even look at equity. They can make a few mistakes, like Professor Basu mentioned, because life is all about learning from mistakes. I don't think very often we overcomplicate mistakes. Mistakes are great. I've always loved all the mistakes I've made in my career, because from every mistake I've emerged stronger and better. So have financial discipline, start small, investing, and while as they look at mutual funds and they do the first investment, then over time they see that mutual fund, they should see the performance of the mutual fund, how is it doing? And when they see the power of compounding, and if they've picked up some good mutual funds, it will be a part of their life. And just imagine if you start doing that when you're a student, you can just imagine where you will be at a later stage in life. And look at diversification within that. They should learn that it's not only equity, maybe it's other asset classes. They can over time look at different things. And then as they go older, they can look at investing in stocks. They can look at diversification in other geographies of the world. Like today, the world has opened up, but that will only be done at a later stage.
Right, sir. So I have a follow-up question to this, for you. Like today, like you said, that they have to, start slowly and do all of this. But with social media in the picture, right, and with so many financial influencers and general influencers promoting crypto, NFTs, and giving advice, how should young adults take this? So how should they navigate through all of this while taking so much information in?
So I don't understand crypto, honestly. Maybe I haven't tried hard enough, but I don't invest it. I know a lot of people do that. So I also believe, and very often Warren Buffett is a big proponent of that. If you don't understand something, don't try and do it. So I'm a big believer in that. So if they obviously deeply understand crypto, and then it's separate. But I would say, if you don't understand it, don't do it. So I haven't invested even a rupee in crypto. And I would also say to them, look at doing some research, R&D before you actually do the investment. Don't do investments based on WhatsApp University. WhatsApp University, every day I get 20 stocks to buy. WhatsApp University is very active. And do your own R&D before you invest. Don't do emotional investing. Sometimes, we've all made some emotional investing. Some of it can become 5 times also over time, but it can also become zero. So avoid emotional kind of investing, and avoid investing in something you don't know enough about. The investments that you do based on common sense, based on understanding. And obviously, as students, they should start with mutual funds, because that's where somebody is managing their money. But the only thing is, just keep on monitoring performance also. A lot of very, very senior CFOs, like I keep on talking about, who are into FDs, and they sometimes, after putting a lot of pressure on them, they start mutual fund investing, but they don't monitor the investing. So it's important to also monitor how your investments are doing and exit them if they're not performing. Give them some time to perform, but exit if they're not performing.
Got it. That's really helpful. So, Snehanshu, like I wanted to ask you about like your relationship with money with like you were saying that you were mentioning how during school and in college you had a relation like how like do you I would want you to expand on that, right? Because I want the students to actually relate to us and actually understand everyone goes through a similar cycle unless the cycle is broken. So what was your relationship with money like, and how did it impact your early career in college?
So few things that since you mentioned their parents also listening to this probably, while we speak about giving money to kids to handle, which is great. I mean, I still feel when we were growing up, I remember going up to my father asking for a pocket money at one point, saying that I should start getting a pocket money. And the answer that I got was, what do you need money for? Ask for that, we'll give. So why do you need a pocket money? I feel there are still, at least in my circles, there are still households like that where kids don't really get a pocket money. They're they're given some money which they can do whatever with, and for everything else they can ask the parents again. So I would suggest for the parents to actually give a pocket money if they're not doing it. Another thing that I feel, which so while I say that my relationship with money was where I saw my father only invest in FDs and the safe investments, I learned a few things, picked up a few things from that behavior. One was, every time there was a major expenditure, like my education or my sister's education or buying a car or buying a house, magically money would appear from somewhere for these larger expenses. At that point just looked like maybe stroke of luck or something, but now I realized I realized later that it was planning that he had done while he was still investing in FDs and the safe investments. He had planned things to be ready for him when he would need it, based on these milestones. So having that planning was something that I learned, that you need to plan your finances. Maybe the instruments that I learned was what were different, but the idea that you need to plan, the idea that debt is not a great idea always. For some scenarios it's good, or controlled debt is good, but so some of those ideas were what I picked up from my parents. So what I would suggest to the parents here is, talk about money in front of your kids. It should not be a conversation that will happen when kids are not there. You may not be teaching them per se what to do, but just being able to talk that this is where we have kept our money and this is how we are planning. And just, if they're even passively listening to it, they'll learn some of the lessons that you have learned in your journey. And that is how I have learned in the initial days, some of the things which I carry later. There are things that I learned earlier which I changed later as well with respect to specifically instruments that I invest in. But when I started my first job, got money, now I had to invest. There was little guidance available. So for me, the thought was I have to put only enough money in investments so that I can save my taxes. So that 1.5 lakh rupees was my target, that this is what I'm going to invest. Rest is all fine. But the idea of even investing 1,000 rupees a month was not something that I had learned before, because that was not the kind of thing that I had seen, which I learned later. Everyone I know have done mistakes picking up an instrument and then living with it because ab to kar liya. I remember investing in one certain LIC instrument or some insurance linked instrument which I had invested in, which I had to keep for 10 years to then decide that no, this is not worth it. So there are mistakes that you'll make. But if the conversation is going on in the home about investing, whichever instruments, but at least talk about it, let the child have some pocket money which they have to manage on their own. Some of those things will help them a lot. And the idea that you have to plan your finances and stay away from too much debt and plan those things is what I would say. If that much I had learned early on, would have been so much more better.
Maybe I can just add one thing to it, that kids, reason my kids are active investors today because they see some of that. Kids observe everything their parents do. So if hypothetically there is a son in the house and he assumes his dad is his role model, he's observing everything he does. If he hypothetically sees his dad only spending money, big spending, and not investing at all, he'll try and do the same. If he sees his dad saving, investing, and doing different types of investing and having those conversations with this kid, kids follow their parents more than anyone ever knows. And so that's what, just be role models for your kids is what I would love to tell every parent listening to this.
Absolutely. So yeah, I think we are a little bit short on time. So I'll go towards wrapping up this discussion with a final question to all the panelists. I would want to know, like, what is your one financial advice that you would want to give to all the students, and especially like to students who are delaying learning about money or learning about finance by saying, "Okay, it's not important right now," or "I'll do it after college," or "I'll do it when I get my first job." Like, what would be your final advice? One piece of advice that you would want to give them. Starting with you, Sankarshan sir.
Well, as I said already, I think the advice would be do not delay. Start. I mean, if you've not done it till now, you're already late. You should have started it as of yesterday. Being financially literate, being financially aware is a life skill, is something which you need to know to survive. You don't need to become an expert, but you need to know that to survive. And therefore, thinking that you'll do it at a later point in time, delaying that, using a T+1, T+2 kind of syndrome, that I'll do it tomorrow, let me get here, then I'll do it, is only going to complicate and only going to make life more complicated, and you're going to lose out in the longer run. So do not delay. It's good if you've already started. If you haven't, start ASAP. There's no point. There's nothing like, don't procrastinate to push it to the next day.
Perfect. Asit sir, your thoughts.
I just mention a couple of generic points. One is obviously invest early. Two is prepare as young students for everything in life. I used to prepare for even a 10-minute conference call. 1 minute preparation, 2 minute preparation, but just prepare in everything you want to do in life. You're going for an interview, prepare for that. If you're doing an investment, prepare for that. Don't underestimate the power of preparation. It's always better to do that. And the last is bring your passion at play. Bring your passion. Assume you're investing. Bring your passion in investing, and you'll see the power of compounding coming in there. And you will realize you over time will save more from investing than anything else. Bring your passion at work, into education. If you love a particular subject, try and discover your passion So then you can discover your career and you'll see yourself doing very well.
Great. So thank you. Thank you so much. Snehanshu, your thoughts?
Two or three thoughts largely. One, for people who have not started and are thinking, I don't have enough money to start, there's nothing like that. You can start with 100 rupees, 500 rupees, 1000 rupees, whatever you can spare. But the idea of getting into that habit is the more important part. Money will, anyway, you start earning more eventually and you'll start investing more. But don't wait for the day that till the day when I make 10,000 rupees, I don't have enough to invest. You can always spare some money to do that. So try and put that effort on that. The other side is for the other extreme where people get swayed by the stories that they hear, that this guy invested in this and made so much money, and get swayed by that. Please understand, these are only the success stories that you're hearing. There are a lot of people who struggle with those kind of things. So don't just follow and get swayed by the stories that you hear, especially on social media. Put a little bit of effort to understand what's happening, and it's not rocket science really to not be able to figure that out. So I think those are two largely the point that I would want to make regarding starting a journey on the two extremes of
Mikul,
that
if
point.
somebody starts investing at the age of 10,
Yeah.
okay, today most people probably start at 25, 30. Assume they start today at 30. If they start at the age of 10, there's 20 years of more compounding in their life and their investing. These guys will become, even if it's small investments, doesn't matter. It's the power of compounding. I've seen that happen with my dad starting very small investments in 1960. So it's a power of compounding. It could be an IIM case study, sir. If the power of compounding with young students.
Oh, it's been done. Yeah, absolutely.
Perfect. Yeah, the conversation that we had today, I hope is very insightful for everybody on this live. A big thanks to all our amazing panelists for sharing your thoughts, insights, and engaging anecdotes. I'm sure everyone watching, whether they're a student, a parent, or a teacher, has a lot to think about and further explore as well. Once again, a sincere appreciation to all our panelists for coming in, having this conversation with us, and giving the time. Thank you so much, sir. And I think we'll move on to the winner announcements now. Thank you for
Thank
thank
you.
you for all the panelists
Thanks
for
for having
being
us.
here. Yeah,
Thank you.
Thank you so much.
Thank you. Thank you. All the best.
Thank you. Great. Now I'll hand it over to Shiv, who's also a co-founder of Streak, to take the evening forward. Shiv, over to you.
Hi, everyone. Now is the time that you've all been waiting for. All the students, I'm sure you've been waiting for about 45, 50 minutes for this now. This is the winner announcement for the National Finance Olympiad 2023. The competition this year was extremely fierce, and the dedication shown by all the participants is truly, truly commendable. The top 3 winners from each category will be awarded a certificate along with a trophy and a cash prize. And I'm going to tell you what the cash prizes are, and then I'll get to the positions after that. The cash prize for the third position is rupees 5,000. The cash prize for the second position is rupees 10,000. And the first prize is rupees 20,000. And with that, I would like to start by announcing the winners from grades 11th to 12th. The third prize goes to Arshia Gupta from class 12th of Delhi Public School, Sector 45, Gurgaon. Congratulations, Arshia. The second prize goes to Om Gupta of class 12th of Central Hindu Boys School, Varanasi. That's an amazing performance, Om. Keep up the good work. And the first prize of grade 11 to 12th goes to Dhruv Gupta of class 12 from Shri Kumaran Children's Home, CBSE Bangalore. Congratulations, Dhruv, and keep up the amazing work. Great job, all of you. And I'm going to be announcing the next 7 positions as well. So the next 7 positions are, you will be able to see it on your screen. And great work, everybody. I hope you've had an enriching experience by participating in the National Finance Olympiad, and you've learned something new as well. Congratulations, everyone. I'm going to hold it here for a second so that you can check your name, check if your name is there. Okay, now coming to the next batch of grades 9th to 10th, we have the 3rd position, which goes to Meghna Painadat of class 9th of National Public School HSR Layout. Great work, Meghna. Keep it up. The 2nd position of grades 9 to 10th goes to Kritin Verma of class 10th from Delhi Public School Electronic City, Bangalore. Congratulations, Kritin. And the first prize goes to Rushabh Jain of class 10th from Navrachna Higher Secondary School, Vadodara. Congratulations, Rushabh. You've really outperformed. Great work. I'm going to be showing the next 7 positions on your screen as well. So you can find your name on that. And congratulations if you are on it. Next time, I hope to see some of you in the top 3 as well. We will hold it here for a second so you can check it. With this, we come to the 3rd batch, the batch of grades 6 to 8. And the 3rd prize goes to Shrey Bhutra of class 8th of Bishop School Camp, Pune. Congratulations, Shrey. Keep it up. The 2nd place goes to Ashi Kapadia of class 6th from Dr. Pillai Global Academy from Borivali. Congratulations, Ashi. Keep it up. And the first prize goes to Akaisha Katyal from class 7th from Delhi Public School Sector 45 Gurgaon. Congratulations, Akaisha. You've really outperformed. Keep it up. And I hope you continue your good work. The next 7 positions are going to be mentioned on the screen. So congratulations, all of you. I'm sure you've put in a lot of hard work and, really put in a lot of effort to get these positions. So with that, I would like to, give a big shout out to all the winners and participants of NFO 2023. The certificates and reports for all the students will be available on the portal tomorrow. So you can go to the portal and log in and check for your certificates and reports as well. Now, before we end this ceremony, I wanted to take a moment to talk about exciting next steps for grades 6 to 8. Many of you have asked us if we have more to help you in your financial journey. I'm thrilled to let you know that NFO has online live sessions coming up that dive into various financial topics through real-world practical exercises. These sessions are personalized based on the individual needs of each and every student. So if you're interested, you can sign up on the wait list and the NFO team will reach out to you with all the details. The sessions are open to only classes of 6, 7, and 8. The link for signing up is mentioned in the bio, in the YouTube bio itself, and we're excited to be part of your financial journey. As we wrap up today's panel discussion and felicitation, let's carry forward the momentum that we've gained from these insightful conversations with our panelists and with each other. To all our young attendees, parents, teachers, remember that financial literacy is a lifelong journey, and today's discussion is just the beginning. A big thank you to our esteemed panelists for joining us, sharing your expertise, and congratulations again to all the winners and participants. Let's continue inspiring everybody around us so that everybody becomes financially savvy and empowered. Thank you, everyone, and have a wonderful, wonderful evening. All the best for your future, and we hope to see you again next year in National Finance Olympiad.
Thank you, Shiv, for announcing the winners. And yes, congratulations to all the winners of NFO 2023, and to everyone who participated and could not make to the top three. Keep it up. Try again next year. Prepare harder, and I'm sure you can also be a part of the top three in your batch. But congratulations to all the winners. Congratulations to all the participants for making it to the national level. That's a big deal. Yeah, we expect to see all of you next year again for NFO 2024. Thank you and have a great evening. Bye-bye.